Good morning, everybody. This is the live market open for Wednesday, April 20th. I'm Yohay, Elam of Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Good morning, everybody. Today we'll talk as usual about recent developments in markets. We're seeing some kind of cooling down after yesterday's big moves. Lots of excitement yesterday. We'll cover the usual charts and levels. We have some regular charts, and of course, if you want questions about other stuff, that's what we're here for. The next 24 hours, and of course, as aforementioned, your questions. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, what's going on in markets? Well, yesterday the dollar was dumped, a big sell-off in the greenback. Only the yen at some points managed to, dropped against the dollar, so dollar yen was going up at some points, but in general, it was just the dollar being sold off quite heavily, reached new levels in commodity currencies. Aussie dollar, Kiwi dollar, and the Canadian dollar all reached multi-month highs against the against the US dollar, sorry. But now we have sort of a shift. Good morning, Sinatra. Good morning, Dinda. Good morning, Jake. We have some kind of shift. First of all, the strike, if you remember, in Kuwait, the oil production workers, they ended their strike, okay? Instructions from the Emir, if I understand correctly. Anyway, this sort of helped oil prices recover after the Doha disappointment, after oil producers did not reach any agreement on cutting oil production. And now, so because there were fears that oil supply would be hurt because of the strike, so now the strike is over. This helps cooling down, and also it's some kind of profit taking after what we've seen yesterday. Another currency that is a bit retreating from the highs, as we've mentioned many times in the show, the British pound also followed commodity currencies. When the mood is good, the pound went up alongside commodities, alongside oil. And when the mood was darker, the pound suffered. So yesterday, the pound got some kind of a blow from Mark Carney, the governor of the Bank of England. He made it clear that the Bank of England is not political, but they warned about heavy uncertainty, which means troubles, damage to the city of London because of leaving Europe, harder to finance the trade deficit, and of course, they're ready to cut rates. So that hurt the British pound. Okay. Anyway, that's what's going on that's what happened yesterday. Another thing that happened is a speech by no signal yet. You can't see me. I hope things are working. Let me check. There's some issues perhaps with the Let me see if I can get you the direct link to YouTube. Try this. Okay. I hope this helps. Anyway, I hope this helps. The link to YouTube. Anyway, I see that the FX Street website is undergoing some, it's a bit stuck at the moment. Anyway, I was talking about the dollar being dumped. Commodity currencies were on roll, but now, with the end of the strike in Kuwait and some profit taking and some falls in Asian stocks, which I didn't mention before, we're seeing some kind of a shift. Also, Carney talked about not liking Brexit, damage to the city, harder for the trade deficit, ready to cut rates. In Canada, we did hear some optimism from Stephen Pelosi, the governor of the central bank. No need to cut rates. Fiscal policy at this moment is much more effective than monetary policy. That helped the Canadian dollar rise as well. And Stevens of the RBA, the Reserve Bank of Australia, did complain a bit about others intervening in markets, but he also does a lot of job owning anyway. He didn't say anything to really move the Australian dollar. Okay, In terms of data yesterday, we had the German zoo figure. Contrary to my expectations, at least for the future outlook, it beat expectations with 11 points. And the current conditions, it missed by a bit. It didn't move the euro too much. The euro was more of a slow mover. It eventually, euro dollar did get carried away with the better mood in markets, with the big sell-off in the US dollar, and also the euro managed to advance to break above resistance at 113.35. We'll show the charts very soon. US housing missed on both accounts, both figures. Housing starts and building permits fell to 109 million annualized, worse than expected. It already came on fertile ground for the US dollar sell-off, so it just exacerbated the situation for the greenback. For the Kiwi, it got another boost of support from milk prices, so everything is going in favor of the Kiwi this week. Higher CPI, higher milk prices, and of course a crash of the US dollar. And in oil, well, we had this API report. It's sort of preliminary. It's a warm-up for the big thing, the real thing today. It's every week, these things, and we're seeing the same trend. More crude in inventories, but less gasoline and distillates. So it's quite a mixed report. Anyway, it didn't provide a real surprise. Okay, enough talking about data. Let's show you some charts. I hope you can all see me, see the slides, not see me at the moment, and hear my voice. I know we had some issues here. Anyway, euro dollar yesterday, as I mentioned before, it got carried away. So euro dollar did make a move with other currencies. It made a move above 113.35, and it reached a high here of 113.85. Since then, it's been sliding. As I said, the tables have turned. We didn't have a turnaround Tuesday, but it's sort of a turnaround Wednesday, if you wish. So that's where we are at the moment. Still above 113.35, resistance at 114.10, high resistance 114.60, which remains a very, very strong line. Lower support at 112.50. Okay, so that's where we're standing at the moment. So euro dollar is one of the slower movers across the board. One of the reasons for the slower moves is the anticipation for tomorrow's big event. As you know, Mario Draghi is meeting the press. The ECB is not expected to change policy, but in his speech, he might talk about helicopters. We'll do a bigger, sort of longer preview today, and of course, much longer tomorrow before the big event. All right. Anyway, I'll just mention he speaks also today, Draghi, and I expect him to say nothing related to monetary policy, because as you know, central bankers, especially the ECB and the Fed, when they're in this quiet period, when in the days leading to the event, they keep their cards close to the chest and don't say anything. I think he'll give us a big show tomorrow, but not today. Okay, pound dollar. Here we had a big move. We had a move above 143.65, which was the previous line of resistance. We actually crossed above 144, and that's when Carney began speaking. He spoke in Parliament, providing testimony about basically the implications of a Brexit. As I mentioned before, Carney, he said they're not political. He's just making a professional assessment. He said he would not make an overall assessment of the EU membership because that's not his job. And he also said that China poses a bigger risk to the UK economy than a Brexit, which doesn't sound very serious because the UK trades much more with the Eurozone and in general within the European Union, which is close by, than with China. So it just seemed to counter what he did say against the Brexit, and that was quite clear. He said that already there are signs that the uncertainty is taking its toll on the British economy, specifically for bankers, for the City of London, for people who donate money to the political parties. He also said that it would hurt the City of London. A Brexit, talked about the trade deficit, I said that. And of course, he would trigger a long period of uncertainty, which isn't news, of course, because we know what the current situation is. We don't know what things will change in the future if the UK indeed decides to leave. But when central bankers, when policymakers say uncertainty, uncertainty is not a good thing. That means he's talking about issues for the British economy. He was sort of criticized for making a political statement. He insisted it wasn't political, but just a professional assessment. Anyway, it's very hard to tiptoe. Everything is political. Anyway, it seems that the central bank, of course, they're also ready to cut rates to zero in case the UK leaves the EU. Again, the chances are higher for Brits deciding to stay in, continuing sticking with the devil they know. But the polls show a high percentage of undecided voters, and you never know what will happen. If I'm already on the topic of elections, we had the primaries in New York. I didn't mention it at the beginning because the results were as expected. Hillary Clinton won, I think it was 58 to 42% against Sanders, more or less as expected. And Donald Trump took 60% of the vote and nearly 90-something% of the delegates. Both of these are the front runners. Both had a series of losses beforehand in much smaller states, and they were expected to win, and that's what happened. Some analysts say, okay, now they're clinching closer to the nomination more than they were beforehand. And other analysts say that, well, these are exactly the results that were expected. Remember that for markets do like more establishment voters, less the outsiders. So in the Democratic Party, this would be the victory for Clinton tonight is perceived as good news, as a continuation to Obama, to the current policy, to less uncertainty, let's call it this way. But on the other hand, Trump is really a wild card. I personally think he's very dangerous. So if he's getting closer to the nomination, it's bad news for markets. Once again, I must say, we're already in this primary season for 2.5 months. So far, I mean, it's a fascinating political story, but no impact on markets so far, no direct impact at least. Okay, let's go back to the charts. I talked a lot about politics. So dollar yen did make a move higher. Of course, it closed the gap already yesterday morning, went up all the way to 109.50. Now it's falling once again. It's more of a damp mood in markets. If you want risk off, stronger Japanese yen. Another thing to note in Japan is that Japanese bond yields continued digging well below the bottom of the barrel. So 10-year bonds in Japan are at minus 0.13. If you want to lend, you have to pay money to the Japanese government. You're paying the Japanese government to lend it money for 10 years. That's a bit crazy, and even for longer maturities. If you want to get some money back from the Japanese government for lending money to them, you will need to lend the money for a very, very long time. And of course, lower yields are a bit problematic. It's another thing to note. Anyway, in theory, it should weaken the currency, but we've seen Japan, the yen more correlated with stocks, dollar yen more correlated with stocks, higher stocks, weaker yen, lower stocks, especially the Nikkei, lower yen, stronger. So anyway, dollar yen 107.65 is support, 109 is already weaker resistance, 110 remains high resistance. We didn't really reach 110 in the past few days. The yen remains relatively strong and resilient. Dollar CAD, here we had a huge move to the downside. Stronger Canadian dollar, riding on higher oil prices yesterday and on the big sell-off of the US dollar. So now we're back, just now at 127, still under support there at 127.50, a line that supported the pair last week. Okay, so but the Canadian dollar, despite this move to the upside now, we're about 30 pips higher on the day. On dollar CAD, that means a weaker Canadian dollar, lower oil prices, but in the bigger scheme of things, the Canadian dollar is very, very strong. Okay, I see a comment here from Jax. Couldn't get here from FX Street. Yeah, I see there's some issues with FX Street. Yes, you can use my website at the moment, which is broadcasting. I'll add this link for all of you in the chat. I hope you can hear me. I don't see even the video now. Okay, see it. Okay, so this should work. This should as well. This is the chat with the video. Video plus chat together. Okay, anyway, new FX Street site. I hope it'll. They're always glitches with the new website. It looks great, by the way. So once things are resolved, I'm sure you'll enjoy the new website. I had the pleasure, the honor to be part of the testing group in the beta site. Anyway, let's go back to currencies. The Canadian dollar remains strong. FX Street is completely down. Yeah, I'm sure. Yeah, as Dinda says, trying to resolve the issue. I also had my own experience with a new website. There are always glitches at the beginning. I'm sure the engineers in FX Street are on it as we speak. Anyway, hope you can hear my voice and see the slides. Anyway, currently 127 on dollar CAD. We're waiting another speech by the governor later on today. I don't think he'll add a lot to what he said yesterday. Anyway, 127.50, 128.30 on the top side. Let's move this line down here. I would say 126.30 is support on the downside. Aussie dollar. Aussie dollar made a nice move yesterday. Had the ingredients for a rise. It made a move above 77.40 and continued north. It went above 78. Already reached 78.25. Since then, now it's consolidating. It's falling 20 pips to the downside. All right, because yeah, there is a speech by Draghi today, but as I mentioned before, he will not say anything new before tomorrow's ECB decision. Okay, because that's how they work. I mean, in the United States, they have no scheduled speeches around in the 2 weeks leading to the event. Okay, so yeah, Draghi, I'll cover the events for today later on. Just finish with the charts. Anyway, Aussie dollar is consolidating just a bit, nothing of significance from Glenn Stevens. 77.40 support, 78.40 is resistance. It worked as support in the past, followed by 79 and 80. Kiwi dollar, a huge winner yesterday, now about to slide just around the 70 level. So yesterday it reached 77.50. The Kiwi dollar, as I mentioned before, higher milk prices, higher inflation. Yeah, next week we have a rate decision by the Reserve Bank of New Zealand. They might surprise with the rate cut, or at least much more significant job owning, because they're clearly not pleased with the strength of the Kiwi. On the other hand, if inflation is higher, why should they cut rates? So anyway, we'll talk about that, the preview for next week. Currently, anyway, we broke above 69.80, which is support at the moment. 70.30 is weak resistance there, and we have 71.70 as higher resistance. Let's move to other currency pairs. Dollar Swiss. We had it trade for some time above this previous support line, turned resistance at 96.40. Currently under this level, 96.20. Weaker US dollar is reflected here. Okay, support somewhere there at 95.15. Euro Swiss a bit moving to the upside. I don't have evidence of S&B intervention. Anyway, the range is 10 pips for today. Nothing to write home about. Hugging 109. Well, a bit above this level. Euro pound. Well, here we had a bit more excitement yesterday. Currently it's 79. It fell under 79.30 and it was unable to recover this level. So the 79.30 line in euro pound is very, very strong. It worked initially as resistance on the way up. Okay, let me zoom out just a second. Here we are. You see how it worked here as resistance at the end of February. Then sort of once again, less stronger manner at the end of March, mid-March, and now it worked as support in early April, and after falling, it works now as resistance. Very strong line. Further support 78.30, resistance 80.25. Okay, euro yen. Euro yen. Well, it fell to the abyss when the yen was strengthening on Monday morning, with the Doha disappointment, with the failure to agree on any cut in production. Since then, it recovered quite nicely. The euro did recover. The yen lost some ground yesterday when we had the positive mood in markets. Now it's sliding just a bit. Relatively stable, 124.20 resistance, 123 support. And pound yen. So with the better mood in markets, we did have a rise, but Carney took some of the hot air out of pound yen. 156.30, 156 works as support. We already crossed the 157 line, including earlier today. Yeah, I see strong resistance only at 158.50, and we were very short of this level. But anyway, anyway, 156 is support. And of course, oil prices, usually mention it with in the context of the Canadian dollar. So anyway, with the disappointment in Doha, we fell all the way to 37.60. And since then, we had a gradual climb on the strike in Kuwait, on profit taking. We reached the previous high levels there of 42.40. But since then we fell, so we're about 2% down on the day, currently at 41.44. Comment here from Sinatra: crude diverging in the hourly chart. Okay, thanks for sharing. Yeah, so it's, I'll share your chart with everybody. So we're seeing it met resistance there, downtrend resistance, and you're dating it. Yeah, so that's a WTI crude oil daily chart. Yeah. Anyway, it reached high resistance. Now this wedge is closing in on WTI crude oil, and see a potential to the downside all the way to 34.37. Okay. It's an interesting observation. As you see here, we have also uptrend resistance going all the way from the $26 abyss we've seen in February. So let's see if we have a break to the downside. I remain bearish on oil. Still too much supply, not enough demand. And the strike in Kuwait was only a temporary move. Iran wants to produce as much as possible. The only thing impeding Iran, it seems that there's a lack of ships at the moment to send all this oil out. But in general, too much supply, not enough demand. And if oil prices remain at these levels, the US will ramp up production. Or of course, I mean, if oil prices rise, we'll have them fall down again because of more production. The flexibility of the US shale industry provides for limits the ranges. Okay, so if $26 a barrel was let's buy a tanker. Yeah, $26 a barrel was too low. Already began hitting production, but $40, if it's sustained, it could be too high to keep production too low. So we could have higher production and then lower prices. The pendulum continues swinging. Okay, so we covered all the usual charts. Well, this is also something I like to look at. Okay, so 100% against the rate hike next week, according to bond markets. We reached that very round and complete level in June. Well, slightly higher chances for rate hike in June, but still under 20%. So yesterday we were at 14%, and now we're at, well, 18%, maybe 19 if I want to be generous. In December, that's when a rate hike is more on the cards. About 60% for rate hike, maybe in November already. No, November. Anyway, in November it's not really feasible just before the elections. Of course, this is the implied probability of a rate hike according to bond markets. Okay, we had earlier this week the Fed's Eric Rosengren, the president of the Boston Fed, talking about that the markets are too pessimistic, that the Fed could raise rates and things like that. And he's a known dove, but his comments were ignored because we've already heard too many doves going hawkish, only to hear Yellen and to a lesser extent also Dudley pour lots of cold water and say there's nothing really coming up. So let's talk about events for today. We had yet another miss in German inflation figures. In the producer price index, it was a flat 0 month over month. Expectations were for a small rise. Not really surprising. Nothing we didn't know. The big event for the morning is not Draghi, but the UK jobs report. In the United Kingdom, let's zoom in a bit. We have at 10:30 here local time, 9:30 in the UK, 8:30 GMT. Lots of figures. So the most important one remains wages. Wages for February, including bonuses, are expected to accelerate from an annual rate of 2.1 to 2.3%, and excluding bonuses, they're expected to remain unchanged at 2.2. Rises in wages are needed for the Bank of England to be convinced that that inflation is picking up. Okay, so that remains key figure. Also, worth noting is the unemployment rate, which is relatively low in the UK, 5.1. This is a figure for February as well. If you want more updated data, it's the claimant count change, which is in other countries just called jobless claims. So we've seen a nice drop of 18,000 back in February. Now we expect a drop of 10,000 in March. So expectations are still for a robust labor market, or at least in terms of jobs, perhaps less so of wages. In the UK, we had wages rise as fast as 3% year over year, and since then it has cooled down, but remains A-okay. So we're not expecting any Brexit impacts, fear of Brexit impacts on the UK. We have seen the trade balance change just a bit, perhaps in the figures released next month in May. For April, for March, we'll see something getting worse, but at least for now, the situation looks good. If we see deterioration in job figures today, it can, of course, first hurt the pound because it implies looser monetary policy by the Bank of England, and it also well, it could be used politically on both ways. I mean, those that fear Brexit, though Project Fear, as some of them are called, I mean, those proposing to remain in the EU could tell us, well, look, look what happens only because of the fear of Brexit. And those against could use it and say, look, staying in the EU hurts our employment. Migrants are taking our jobs. Anyway, the political argument is less important here. It has more of a market impact, which interests us more. Well, at the moment, until the Brexit is still, of course, important for markets, but this figure should have less of an impact on Brexit, more of an impact on the Bank of England. So wages first, and then the jobless claims. So yes, we have a speech from Draghi at 10 GMT, but he'll be speaking at the Euro Generation Euro event in Frankfurt, I think he'll say anything but monetary policy. I'll be surprised if he gives us hints for tomorrow, because they don't do these kind of things 24 hours from the event. At 12:30 GMT, we have wholesale sales in Canada. Not such an important figure, but if you're trading the loonie, it's worth watching. More importantly, at 2 GMT, we have existing home sales in the United States. Figure for the month of March, we're expecting a rise of 3.5% to 5.3 million annualized. Remember, it's not 5.3 million homes sold in March expected, but it's an annualized level. Existing home sales are the vast majority of the home sales market, but they trigger less economic activity than new home sales. Still, of course, an event worth watching, especially after the big disappointments yesterday that we had both building permits and housing starts fall behind. Okay. Yeah, and another event, of course, worth watching is the weekly crude oil stocks change, crude oil inventories. We're expecting a drop of, no expectations here. According to the API figures, we're expecting perhaps a buildup in crude oil inventories, but perhaps a drawdown in distillates and gasoline to keep the picture balanced. If all figures go in the same direction, as always, it makes difference. I would also note we always look closely at the crude oil inventories because it's easier to say, well, it's up or down, but I think we should focus a bit more on the level of production. Okay, a few weeks ago, we fell under 9 million barrels per day in the United States. It was a small fall in comparison to the week beforehand and the 2 weeks beforehand. But in the bigger scheme of things, oil production did continue rising during 2015, despite the crash in oil prices. Okay, reached a peak of 9.6 million barrels per day, if I'm not mistaken, and then it gradually began falling. Now it's a bit worse. It's reacting to lower levels, and let's see if this trend continues. Question here: what do you think about the silver chart? I haven't looked at silver in a long time. Sometimes dubbed as the devil's metal, right? Overbought and diverging on the daily and H1. Let's see if I have it here. No. Yeah, this looks a bit off the charts, no? This rise in silver prices. Hope I'm looking at the right chart. I must say I don't really follow this, but yeah, we had it capped here under 1640. And then boom, we went all the way to 1720. It looks a bit far out. If we look at the bigger picture of the moves in silver prices, this is clearly a big it's easy to see that it's a bit wild. Well, we had wilder days in 2011, but in comparison to recent days, recent months, I would say, even when we had this big fall right here in November, it was much more gradual than what we're seeing in the last few days, especially yesterday. So yeah, I tend to agree that it's a bit overbought. Anyway, watch for the 1640 level, which was support back in October, for a move back to the downside on this. Okay. Diverging H1 daily. Yeah. Yeah, so it looks a bit wild, I would say. Okay. Yeah. Okay, let's go back, see if we had any developments in euro dollar. No, it isn't moving that much. I must say I'm frustrated with euro dollar. We have a few more minutes before the wrap, and I don't see any questions. So let's talk perhaps a bit more about the ECB. I just wrote earlier this morning my preview on Forex Crunch for the ECB. So the European Central Bank meets tomorrow. Draghi speaking today and is expected to give us no hints. And tomorrow we're not expecting any policy change. The European Central Bank introduced on March 10th a huge stimulus package, enlarged QE from 60 to 80 billion euros a month. Okay, that was the upper end of expectations after not raising it back in December. That's one step. The second step, they cut the deposit rate more or less as expected from minus 30 to minus 40 points. A surprising move came by cutting the main lending rate from 0.05 to a very flat and round zero, and they introduced four TLTROs. All the measures except the TLTROs were already implemented in markets. Okay, the ECB has already ramped up its buying and also made buying rules more flexible. TLTROs are expected to begin in June. Okay, so the fact that not all policy measures have been implemented is another reason for them not to act now. In addition, they don't have new forecasts, so there's sort of no basis for more action. And and they just acted in March. Okay, so these are the reasons. I mean, that's the easy part. What they will not do. Okay, they will. I don't expect them to do anything. The big question is, of course, the Draghi show, the press conference at 12 GMT tomorrow. What will Draghi say? Will he open the door to more cuts or not? Remember the market reaction last time. On one hand, he introduced all this stimulus package. On the other hand, he said that sort of we're done for now with rates. Of course, he sort of tracked back on that just a bit. We heard from the meeting minutes that they discussed an even bigger rate cut, but didn't go for it because that would already send it to the lower bound. The conclusion from this is that they have not reached their lower bound, so you may reopen the door to more cuts. But that would not be surprising because we already know that, and we don't expect that anytime soon. And even so, I mean, it doesn't make such a difference if we're already deep in negative ground. It doesn't really encourage investment. Another thing he could say is, once again, tell governments, plead to governments to do more. He could raise the rhetoric over there. Of course, he never says it out loud, but he wants Germany to spend money. Fiscal stimulus, not only monetary stimulus. And of course, it's easier to talk about reform, which is something that everybody can agree with and in theory doesn't cost money. But he might raise rhetoric about that, might open the door to negative rates. But really the big bazooka, which is already wild and at the moment is still a bit inconceivable, but also QE in the Eurozone was inconceivable just 2 years ago, is what's referred to as helicopter money. If you've heard it in recent months, more and more being denied, the mere fact that policymakers are talking about that, even though they're denying it, makes it a viable option, a trial balloon to attract reaction from markets. What is helicopter money? It's basically giving citizens here in the Eurozone money, or if you want, food stamps or whatever you want to call it, in order for them to spend money to stimulate the economy. It's a form of fiscal stimulus. More traditional fiscal stimulus would be to build roads, bridges, schools, encourage investment, basically government spending to encourage economic activity. And helicopter money is a wild concept that gives people money to spend it. Varoufakis offered this option for the poorest in the European Union, including the working poor in East Germany. Anyway, it's still a wild idea, and it's of course for Germans, and not only for Germans. I mean, for many people, when you hear about this concept of helicopter money, you think about the Weimar Republic in the early 20s, 1923, of hyperinflation. It's a bit wild, of course. It would be seen as the ECB going, of any central bank actually, going well beyond its mandate, doing something very crazy. But things that seemed crazy in the past are more consensus. So you never know. I think last time he responded to a question about that, he said he didn't fully rule it out. Okay, so Draghi said that it's an interesting concept. We haven't discussed it or something like that. What he could do now, of course, we're too far away from implementing such a bold and perhaps wild and crazy policy. But that would be to say that they had a discussion about that. Okay, that would perhaps scare markets, because the best way of printing money is not lending it to banks, not buying government bonds, but just to throw it on people. Okay, so yeah, as I hear here from Sinatra, we need more mammoth projects like back in the Cold War era. They had 1 million Reichsmark notes to buy bread in that time. Anyway, I think it would be better step would be to improve the German roads, and perhaps here in Spain also direct investment, not just giving money to banks, would also be helpful. And same for many other countries. Green energy is a noble cause. There are many things you can do before just throwing money at the people. But I think if basically what Draghi wants, if we go back to sort of what they have an inflation goal of 2% or lower on headline inflation. They're missing it time after time. It's not only oil prices, we all know that. What would help them a lot would be a lower exchange rate of the euro. Okay, that would make European exports more attractive and imported goods more expensive, thus lifting inflation. Saying that they had a discussion about this wild concept of helicopter money would weaken the euro. Okay, and that would help the ECB achieve its goals. Remember, it's not only that the euro is a bit stronger at the moment against the US dollar, it is also stronger against the Chinese yuan, which is more or less pegged to the US dollar. So you have the euro at a competitive disadvantage, if you wish, against the two largest economies in the world. Okay, enough said about the ECB. Let's get to the wrap up for today. This is the wrap up for the live market open for April 20th. It's Wednesday, and we're seeing cool down in markets after a big sell-off of the US dollar, big rallies in stocks. Commodity currencies were on a roll. All of them reached new highs against the US dollar. But now we have some profit taking, falling stocks in Asia, and regarding oil prices, we have an end to the strike of oil producers in Kuwait. So that would shape sort of a more calm mood. It's not a total reversal from yesterday. Yesterday was a huge rally, and now we're just cooling down. Okay, it's not terrible. For the UK, Carney was grilled by members of parliament. On one hand, he said he's not political. On the other hand, he said lots of uncertainty, damage to the city, harder to fund the trade deficit in general, very sort of warning a lot about the Brexit, certainly weighing in the debate, and that they're of course ready to cut rates. So that cooled down the pound. Elsewhere, well, mostly commodity currencies moved by their respective but by the better mood in markets rather than central bankers. Other figures we had yesterday worsening the situation in the US was the housing figures. Both missed. Usually they offset each other. This time they both went in the same direction. down. Okay, for the Kiwi, we had milk prices rising for a second consecutive times after a few ups and downs. So also helped the Kiwi conquer the 70 level. And yeah, and API oil was mixed. Currency charts cooling down of the trend we've seen yesterday. Euro dollar quite stable, holding on the gains above resistance at 113.35, resistance 114.10, 114.60, support 112.50. Pound still has support over there at 143.65. You know what? Let's modify this line. This would be a better line. This 143.65 has been eaten by in all directions. 143.50 is a better line of support. 142.80, 142.30 further support. 144.40 resistance. Dollar yen hugging the 109 level. Yesterday it went up. Some sort of risk on, but in general the dollar remains weak. Just the yen, well, more or less unchanged. 107.65 support, 110 resistance. Dollar CAD had an excellent day. Well, the Canadian dollar had an excellent day yesterday, reached a new low of 126.30, a big bounce to the upside, but still under the previous support line of 127.50. So maintaining most of the gains. Same thing for the Australian dollar, 77.87 at the moment, under 78, under the high of 78.25 it reached yesterday. Support at 77.40 and 76.40. Kiwi dollar hugging the 70 level. Yesterday it reached 70.50. Anyway, 69.80 remains support. The Kiwi is very strong. Let's see if the RBNZ next week hits it back. Okay, today we have a mix of figures. We have the UK jobs report. Quite important. First of all, watch out for wages, including bonuses. Then jobless claims, which are good. Let's see if we already have some deterioration in the job market. Probably not this time at least. A speech by Draghi. Low chance of him saying anything substantial one day before the ECB decision. Existing home sales in the US at 2 GMT. We're expecting a rise there. But I won't be surprised by a fall after we've seen other housing figures fall below expectations. For the market mood, we have crude oil inventories, but again, it could be mixed with a rise in crude and a fall in distillates and gasoline. Watch out for production. Another appearance by the Bank of Canada's Stephen Pelosi. And at 1:30, Australian NAB quarterly business sentiment. Yeah. Okay. So I guess we also covered everything in the wrap up for today. Thank you very much, everybody, for coming. Sorry for the technical issues. It's a big day for FX Trade and the new website. Once it'll be stable, I'm sure you'll enjoy it. I've already seen it in action. Anyway, thanks everybody. We'll be here tomorrow with once again a preview for the ECB, last minute preview, and yeah, and covering the events for tomorrow as well. So thank you very much everybody for coming. I wish everybody a safe and successful trading day, and see you tomorrow. So thank you and bye bye.